Welcome, and thank you for joining us today. This is a common sense guide to buying a home, and we will walk you through the entire process. This is about minding your money. I would like to briefly introduce myself. My name is Veronica Heaton. I am the managing broker owner of Veronica's Realty in town Geneva. Veronica's Realty is an all-inclusive real estate brokerage. We have earned the reputation for increasing the value of our clients. We work harder, offer more services, more incentives. We reduce liability, we increase security, and we allow for a seamless, stress-free transaction. Are you ready to buy a home? Let's begin. Buying a home is the biggest purchase of your life. It is also one of the most complex financial transactions that you will ever likely enter into. No doubt, it can seem overwhelming at times, but understanding the key financial aspects of purchasing a home will make you a more educated buyer and help you to put your mind at ease. In the short presentation, we will help guide you through the most critical financial steps of buying your first home. You will need a down payment. This is the amount from your savings that you pay up front to purchase a home. The size of your down payment can vary widely depending on your circumstances. If you have a credit score of 580 or higher, you could be eligible for a down payment as low as 3.5% on a loan from FHA. If you make a bigger down payment, it puts you in a better position to negotiate a lower rate of interest with your lender and means you pay less interest over the life of the loan. You can go online to obtain a free copy of your credit report once a year from the big three credit reporting agencies, Equifax, TransUnion, and Experian. This is a very important step because your credit score is the first thing that a lender will look at when determining whether to loan you the money and at what rate of interest. Your FICO score is determined by a company named the Fair Isaacs Corp. This company analyzes your credit history to see whether you've paid your credit cards on time, how much you owe, and how long you've been using credit accounts. FICO scores range from 300 to 850, and the higher the number, the better. Lenders then use this information to determine your risk of not paying off your loan and the rate of interest that you will be charged. You need to start saving for a down payment. You want to be sure the money that you've stocked away for your home purchase will be there when you need it. And these type of investments will ensure just that. Short-term CDs, money market funds, short-term bonds and bond funds, treasury bills with maturities that match your plan. Hands-off retirement funds. Funding your retirement should always take priority over buying a home. Determining what you can afford. Housing costs include monthly principal and interest payments, plus related items such as property tax, insurance, homeowners fees, and maintenance expenses. When these expenses are added up, they should not exceed 28% of your pre-tax household income. For instance, if you earn $100,000 a year, these expenses should not exceed $28,000 a year or $2,333 a month. All your debt, such as credit cards, student loans, car loans, and any outstanding medical bills, should not add up to more than 36% of your income prior to taxes. If you are making $100,000 a year, your debt should not exceed $36,000 or $3,000 per month. Consider all home-related expenses. It is easy to lose sight of the many expenses that come with home ownership. The two biggest are typically the insurance coverage, and you need that to ensure that your home and personal contents are safe against loss, plus the property taxes that you'll pay your local government each year. If you live in a condo, there may be an association fee. No matter what the property type, the air conditioning is going to break or something is going to go wrong. Plumbers, electricians, and other service repairmen are expensive. You want to keep your house in tip-top shape in order to retain its value. And this means routine service calls to check the heating and cooling systems, painting and other regular upkeep. Finally, you may want to need maintaining the lawn or trimming the trees back surrounding your home. Remember, the outside of your home is the first impression. No one knows your personal financial situation better than what you do. So start by looking for a lender who fits your unique circumstances. There are lenders out there for every type of borrower. Speak with your family and friends. A referral is always a great way to go. Pick one who is a good fit for you. There are lenders out there for every type of borrower. For instance, several agencies of the federal government, from the Federal Housing Administration to the Department of Agriculture, offer loan programs specifically designed for low-income buyers. Many banks and other lenders offer loan programs tailored for first-time buyers. Ask your realtor who they know. It's always a good idea to run the question by friends and family. Go to your bank and ask them what mortgage deals are currently being offered that might fit your specific situation. There is no shortage of financial institutions eager to lend you money. Finding the right one takes time and research. Again, ask your realtor. See who they think would be a good fit for you. Go to banks and mortgage companies in your area and tell them what you are looking for. A mortgage bank specializes in making only mortgage loans and will be directly loaning you its own capital. The FHA is a government agency that insures loans made by lenders it approves. Because these lenders know they have the backing of the US government, they can offer lower interest rates and be more flexible in their closing and credit requirements. For instance, if you have a credit score of 580 or higher, you can get an FHA loan with a down payment as low as 3.5% of a home purchase price. If you have served in the military or are an active duty member, you can apply for a VA loan. These loans are issued by approved lenders and are guaranteed by the federal government. A down payment is typically not required and interest rates are negotiable. If you belong to a credit union, ask about what home loan products they offer. These member-owned financial cooperatives typically offer the same full range of mortgage products as traditional banks. A mortgage broker is a middleman who can shop among numerous lenders to help you find the best deal, and then work with the lender on your behalf. Brokers can be a big time saver by helping you weed through the multitude of lenders out there. Interview 2 or 3 different brokers and always ask up front about their fees, typically 1 to 2.5% of the loan amount. Get references so that you can talk to their recent clients about their experiences. Choose one who seems genuinely interested in your situation and responds to all your questions quickly and thoroughly. Home loans involve large amounts of money, and there are unscrupulous players out there looking to take advantage of buyers. Shop around for a lender you feel comfortable with and that you can trust. Ask friends and acquaintances for recommendations. Ask for references from people who have done business with them and check them out. Know the exact terms of your mortgage, and if you don't, ask your realtor for help. Only sign the documents that you completely understand. If you feel that you're being pressured, walk away. Your income is a critical factor in determining how much a lender will allow you to borrow. As early as possible in the home buying process, collect and organize all forms that document your income for the past 2 years. If you are paid electronically, ask your employer to print out paycheck stubs. Lenders will want to see a stable income pattern, and providing them with a thorough and well-organized set of documents will make the whole process smoother and more efficient. Lenders want to see current as well as previous financial records so that they know that you have a financial cushion to cover the down payment as well as other related expenses, such as closing costs. They will also want a complete list of your debts, such as credit cards, car loans, and student loan debts. Lenders look at the credit score as a key indicator of how likely you are to repay their loan to you. How responsible you are at managing your existing debt is important to lenders and is why they are especially interested in seeing if you have a history of paying your credit card bills on time. If your credit record is less than perfect, you can still qualify for a mortgage. One way is to make a bigger down payment, closer to 20% or more of the purchase price. Or you can try qualifying for an FHA loan, which provides lenders with the security of knowing the loan is backed by the federal government. All in all, the higher your credit score, the more likely the lender is to give you a lower rate of interest and more favorable loan terms. Get your pre-approval. Taking this step will also help provide you with an early look at what you can realistically afford and prevent you from biting off more of a loan than what you can chew or getting overextended. Even with pre-approval, issues can still crop up, such as a property being appraised at a value that is too low to satisfy the lender. Early in the pre-approval process, be sure to ask your lender to go over all the potential issues that could arise so that you are prepared for any last-minute surprises. Private mortgage insurance, or PMI as it is commonly known, is required on most mortgages if your down payment is less than 20%. This is how the lender gets reimbursed if you default on your loan. The cost of PMI varies depending on the size of the loan and credit score, but typically ranges from 0.3% to 1.5% of the loan amount per year, and is usually paid in monthly installments along with your mortgage. If your loan is from FHA or VA, you can purchase mortgage insurance directly from the government. Mortgage options. There are many types of mortgages to choose from when financing your new home. Some of the most common are fixed rate. The interest rate is guaranteed to remain the same for the life of the loan, which typically ranges anywhere from 10 to 30 years. Because of this, your monthly principal and interest payments won't fluctuate from month to month. An adjustable rate, or an ARM, is based on the mortgage you choose. Your interest rate is fixed for a certain amount of years on the front end, usually 5, 7, or 10 years, and then fluctuates for the remainder of the loan. Interest only. This is when you pay the interest on the loan for a fixed period of time, usually 5 to 7 years, and nothing towards the principal. When that time is up, you can refinance or switch to making payments on the principal. A jumbo loan is as the name implies. There are loans that are significantly bigger and what are considered typical loans. What is considered a jumbo loan varies from region to region, but on average, a jumbo loan is considered to be anything above $417,000. These loans require a down payment of at least 20%, and you need to have a credit score of more than 700 to qualify. Construction loans are short-term loans, typically about 1 year, made for the purpose of funding construction of a new house. The loan is doled out in portions to the builder as each stage of construction is completed. These loans require a down payment of at least 20%. Owning a home has long since been the central pillar of realizing the American dream, and Uncle Sam has put in place favorable tax breaks to encourage people to do just that. Among these is the ability to deduct from your gross income the amount you paid in mortgage interest, as well as what you paid in property taxes. You can also deduct the loan origination fees, or points, associated with your mortgage. 1 point is equal to 1% of the loan amount. So 1 point on a $200,000 loan would be $2,000. Closing costs. These are fees charged by lenders and third parties such as attorneys, appraisers, and title companies. Closing costs are typically paid by the buyer and can be 2 to 5% of the purchase price of a home. Did you know that you can negotiate your closing costs? These are called prepaid costs. If a seller is truly motivated, you may be able to have them pay your closing costs for you. Depending on the type of loan, will depend on how many points they would be able to give back to you. This is definitely worth your while so that you can keep money in your pocket. There are some important steps in this process, and one of them is the earnest money. This is a critical step in the home buying process, and it establishes that you are serious enough about buying a property to put hard cash behind your offer. Earnest money is a deposit, typically 1% of the purchase price of the home, which the buyer will put down, and it goes into an escrow account and stays there and is applied towards the down payments. If the deal should fall through due to some unforeseen issue, such as a home inspection, the money is typically returned to the buyer. The home inspection. This is critical. A good home inspector will examine everything in the house from top to bottom, starting at the condition of the roof down to the basement to check for signs of water seepage. They will then prepare a detailed written report of their findings, complete with pictures. Locating a qualified inspector is key. Ask your realtor. Most homes that fall apart is due to inspection issues. It is vital that you show up for the inspection and stay for the duration. A house is a complex structure with multiple components and systems that require regular maintenance and repairs. These include heating and cooling systems, plumbing, roofing, and many more. Plan ahead for regular maintenance repairs by setting aside 1% of the home's price for just such costs. The best way to ensure that you feel secure when buying a new home is to understand the key financial aspects of that purchase. These important steps, such as deciding what price you can afford, where to go for a loan, and how to qualify for a mortgage, are critical decisions that you have to make in your home buying journey. Understanding the ins and outs of these steps will make you an informed, knowledgeable buyer, and in the end will result in your feeling safe and secure about what is likely to be the biggest purchase of your life. Thank you for joining us today. Be sure to check out on my website the differences. This is how Veronica's Realty works with buyers. We have a buyer's preferred program, which is a definite advantage. We give you a free home warranty, a free attorney, and a free inspection. Securing our buyers is important to us. Included in these services and incentives is a moving truck, preliminary inspection, and the VIP maintenance, which follows through forever. Thank you for watching. Take care.